Good afternoon, and welcome to today's webinar, How to Accelerate Auto Loan Recovery Success. Weltman Weinberg & Reese is excited to be partnering with DRN Data on this topic. I'm excited that everyone could join us today. My name is Scott Weltman, and I will be the moderator for today. I'm a shareholder at Weltman. For those of you who aren't familiar with Weltman, allow me to give you a brief overview. For over 90 years, Weltman is focused on all aspects of creditors' rights. We currently have 8 offices across 5 states. We represent nearly every type of creditor, including some of the largest financial institutions in the U.S. in bankruptcy, consumer, commercial collections, collateral recovery, litigation, and real estate default matters. Before we get started, I'd like to take a moment to go over a few housekeeping items. We want to remind you that this is an interactive session, so please submit your questions through the question button in the control panel. Your questions will be addressed throughout the presentation where applicable. I also wanted to mention that this webinar is being recorded. After today's session, a link to the recording will be sent to all attendees. Finally, this is a reminder that this is part 1 of a 2-part series. If you haven't registered for part 2, we'll be sending you that information after today's session. Now let's meet today's panelists. I'm excited to be joined by 2 of my colleagues from Weltman, Amy Holbrook and Stephanie Collier. We're also happy to have with us the Executive Vice President and General Manager of DRN Data, Jeremiah Wheeler. Our panelists have a combined 60 years of experience in auto recovery matters. So with the introductions, Jeremiah, please go ahead and introduce yourself and your company.
Hey, thanks, Scott. I appreciate the invite. Look forward to working with you guys on part 1 and part 2 of this webinar series. So my name is Jeremiah Wheeler. I'm the Executive Vice President and General Manager for DRN Data, and I manage that business along with the business MB Track, both businesses for Motorola Solutions. So happy to be here today. DRN Data is a data and analytics company that we derive a lot of location data from LPR license plate reader cameras that are mobilely mounted and scan in over 390 markets across the country. We scan and collect about 215 million license plate scans a month, and we aggregate that data and we help people find people. So I know today's webinar will be focused a lot around helping the recovery process. So I look forward to breaking into that with you guys and discussing some tips and tricks.
Thanks, Jeremiah. Next, we'll turn to Amy. Please, Amy, go ahead and introduce yourself and tell the group about yourself.
Good afternoon. I'm Amy Holbrook. I'm another partner at Weltman Weinberg & Reese, and I want to thank you for coming this afternoon and sitting through our webinar. I've been with the firm 19 years, so when they say we have 60 years of experience, I guess I got about a third of that. My practice focuses on collateral recovery, replenishing, and secure transactions, and all things related to auto or just secured transaction recovery. We do a national replenishment program that covers all 50 states, and we handle things from the standard replenishment, getting back a car, to more complicated things with third parties in possession we'll talk about later. But again, thank you for coming this afternoon, and I hope we can give you some good information.
Thanks, Amy. Last, coming to us from Indianapolis is Stephanie Collier.
Hi, thanks, Scott. I'm Stephanie Collier. I'm an attorney at Weltman Weinberg & Reese, and it's a pleasure to be here this afternoon and to have a chance to answer a few of the many questions I receive on a daily basis from our clients. So I help our clients guide them through our repossession process and procedure, specifically with state-specific letters and state-specific procedure. I've been with the firm for almost 6 years now, and a big area of my practice is in repossession compliance. So it's a really important area of the law that's constantly evolving and changing. New procedures are being added by case law and state consumer protection statutes. So if you have any questions, please feel free to reach out to me at the end of this. Thanks.
Great, thanks, Stephanie. Thanks, everybody. So now let's get started. The starting point for the discussion today is that not unfamiliar, unfortunate point where our customer has left us with no choice other than to recover your collateral, in this case, the vehicle. And you're ready to repossess. In the perfect world, the decision gets made that you need the collateral back. You send an agent to the address that you have on file, and the customer's waiting for you and willingly surrenders the vehicle. Unfortunately, it's not always that simple. Let's take some time to learn about what happens in the early stages of the auto recovery process, the options available, the compliance measure you must follow. Together, we'll navigate through the entire road to success. So we're going to start first with Jeremiah. Jeremiah, let's set the stage together for our audience to help them understand what happens at the beginning of the process when there's a delinquent auto consumer that's a candidate for repossession. And I'll start with the first question, and certainly expand on it as much as you can. How can license plate recognition data help locate a debtor?
Yeah, thanks, Scott. That's a good question. So just to kind of take a step back really quick for everyone that may or may not know, most lenders will typically assign an account out for repossession at between 60 days past due and 90 days past due, depending on their strategy internally. Some more subprime lenders that deal in the riskier space will assign earlier in cycle. Some as early as 45 days past due. But during that time period that a person goes, 2 days past due until the point that they assign it out for repossession, there's a lot of different activities taking place within that lending institution. Most will try to make phone calls, obviously, and get in touch with that customer to try to arrange payments. They will, in some cases, send a door knock agency out to try to make contact. They may send letters, or if you're opted into their texting program or you have their mobile app downloaded, they will send you push notifications. So there's a variety of different services and ways that people are getting in contact. But if all of those methods fail, they will have no choice but to assign that car out for repossession and hope to get the metal back and liquidate it at an auction. So that's where data companies like ourselves come into play, and we offer some different data and analytic tools built on the backs of our license plate scanning technology. So the way that we help is we offer different products and services to lenders to help them early in the collection cycle, pre-repo assignment, where they can hopefully clean their data up that they're about to send out to a recovery agency. So if they're getting ready to assign it and they're going to put it out at 65 days past due, they may look at our data and make sure that the address that they're going to assign it to is in fact where the car is located. Because we all know that over the years, lenders have placed out accounts. Some lenders place out accounts with multiple addresses, and it's up to, in a lot of cases, the agency to determine which address is better. That's where our data comes into play, and we can help them score and analyze those addresses to hopefully reduce the time to recovery, and most importantly, reduce the expenses and cost of operating for the agencies in the field that operate our camera systems, so that they can make better decisions and go to the best address because they know where the car is because they've seen it in their historical data, versus where the lender is telling them to go, which in some cases is inaccurate. So that's where the kind of the LPR data can come into play and help there.
That's great. So maybe expand a little bit. How is DRN helping to make better recovery assignments?
Well, I touched on it a little bit. Obviously, taking data and a lot of it and producing what we call DRN locations. So if a lender accesses our system and looks into or scores their particular accounts, what we do is we create patterns of multiple scans. So if a car has been seen at a particular address more than 3 times and it's within a very tight clustered radius of that address, and let's just say that address is a residential location, then we can tell that lender to absolutely send that account to this address at 123 Main Street. Don't send it over to Mulberry Street because that address is no longer good for that customer. We're seeing the car at this address multiple times over the last month or so, and we haven't seen it at the old address in more than 2 months. So it's basically, it's shrinking the time to recovery, and as we all know, time is money. So depreciation of assets over a period of time will cost both the lender and the consumer money when that car is finally recovered and sold at auction. Typically what happens is if you owe $10,000 on that auto loan and you default on that and they come and pick it up from you and they sell it at auction, that car may only bring $5,000 at auction, so there's a $5,000 deficiency balance left over. Well, the more we can shrink that timetable down to get it in the fastest time possible, the better off the consumer is going to be with less of deficiency balance, and obviously the lender with bringing those dollars back into their balance sheet sooner. So just through those different processes, and what we saw last year also was customers are migrating. With the pandemic and more people working remotely and working from home, we've seen about 14.5% of subprime borrowers from the time period of February until July last year. About 14.5% of consumers moved 50 miles or more away from the given addresses that were on file for some of our subprime lenders. So it's important to have that really good data so that you make more, improved and increase your recovery response and decrease your time to recovery.
So I'm curious on the license plate scanning. What percentage of the U.S. does that cover? Obviously, there's a lot of not populated areas. So what do you have within your database?
Well, so typically what we've seen is about a 75 to 80% hit rate across all of our portfolios that we've ever looked at, meaning that we've seen your car at least one time. If you look at the clustered locations of multiple sightings within that tight radius of each other, where we can actually produce a scoreable address, it's in the ballpark of 40 to 50%. So we cover the majority of the country where the majority of the population is. We're obviously not very heavy in the Dakotas and other areas where it's more rural populated areas. So we like to say that we look a lot like your typical AT&T or Verizon coverage map.
That's great. So a little bit of a pivot. One of the challenges that we have in our industry is trying to react to people who are in active duty military. So how can we protect ourselves and our reputation and make sure that we're not doing the wrong things with respect to military?
Yeah, absolutely. So the Department of Defense offers a free service to lenders and collection agencies and others that are interested in trying to determine whether or not a service member is active or not. And obviously, you never want to violate those service members' rights and either collect on them inappropriately or improperly, or repossess their car while they are on active duty military. And so we saw a few years ago, maybe 5 or 6 years ago, we saw a need from many of our customers that were spending a lot of time accessing that DoD site and pinging against that site. And it was very repetitive, and it was, in most cases, one-off searches that they had to do. So as they got ready to assign an account out for repo, they would go and log into that site and they would search it and check the box and say this person's good to go, or no, this person is not because they're active duty. And so we built some web service processes that will take our customers' data that opt into our DR Insights program and that want to monitor for active duty military members, and we will take their entire portfolio and ping it against that database every single day. And then we'll provide them alerts back, which includes some additional data points to tell them that they are active, their date of service, which branch they're with, and who they're active with, and in some cases provide some additional levels of contact information so that they can take it a step further and verify and validate that. So we try to offer that to all of our customers. Some take us up on that offer, some do not, because they have their own internal processes that they've already built with web services. But it is available to our customers that opt into that DR Insights program.
That's great, thanks. So another question for you. What's the difference between LPR staging versus direct recovery?
So yeah, that's a very misunderstood concept in the market. So with all of these cameras out there scanning, what we were able to do many years ago, we partnered with some national recovery firms, and what happened was a lender would tell us, well, you're telling me that you're seeing my car, but I'm getting that notice after the fact, right? So most cameras are out on recovery vehicles, so they're scanning in the middle of the night. A lender isn't in the office in the middle of the night. And so that quickly had us, say, well, we need to be able to provide this process in real time and maybe even add an additional service onto it. And we partnered with some national recovery companies, and we said, okay, you guys have the hot list of the vehicles being sought for recovery and you're acting on behalf of that lender. And so what we did was we partnered with them where we would provide the tools in the vehicle, and we would provide the alerting service, and this is what's considered the staging environment. So a lender will give 10,000 accounts over to, a national repossession firm. They will load those accounts into our hot list, and then anytime that a vehicle is out scanning, if it gets a live hit notification in the field, then they can stop and pick up that vehicle in real time. And that's the staging environment versus the direct assignment, which is basically when a lender will send a repo order directly to an agent and say, I want you to pick this car up. So what's great about the staging environment is that lenders can use both. They can have a passive assignment that kind of sits in the cloud waiting for that live real-time hit to occur, and they can have that direct assignment to the agency, because in some cases you'll see a lender will use a direct agent and they think the car's in Dallas. They'll send the order directly to that agent in Dallas, and the passive assignment that's in the staging environment in the cloud, it gets a live hit notification in Phoenix, Arizona, and the car gets picked up in Phoenix. So if you think about the inefficiencies and the time wasted on that agent in Dallas that's running the addresses that were sent to him, could have been avoided if they would have had the data earlier in cycle to see that the car was in Phoenix. But it does pay off in the sense that they're using that passive assignment in the staging environment. So hopefully that's a good enough explanation so it's easy to understand, but I know it could be very confusing at times.
No, that's great. So, the next question and topic is probably one of the most important ones for all of us. When we act as service providers for any client, any creditor, we are an extension of them. How we act, it reflects 100% on our client's reputation, on their goodwill. And so I think, critical in this process is choosing the right agent, to go ahead and repossess a car, because how they act is going to reflect on our clients. So, what's your advice on the best way to select the right agent to repossess a car?
Yeah, so there's a couple of paths that are chosen nowadays by lenders, both large and small. So obviously, if you're selecting direct agents to work your portfolio, there's a long list of compliance items that you need to go through. I know there are associations out there like the American Recoveries Association, and there's local state association. I know in Texas, there's a Texas Association of Licensed Repossessors. Those associations can provide guidance to the lenders, but just a few things. You want to make sure that your agency is compliant. You want to make sure that their drivers and repossessors have background checks ran on them and that they are properly screened and trained. And you want to make sure that their security is appropriate, that their storage lots are well lit and secure. I mean, these are just a few boxes to check off to make sure that they're a compliant agent. And that's on the direct agent side. If you're a lender that has less resources internally to work with those direct agencies one-on-one, and you want to choose a national forwarding agency or a national aggregator, there are those agencies out there, and then you rely on those national agencies to make sure they're vetting their approved agencies appropriately. And so you want to go through and ask them specifically what they do, how they vet their agents, how they discipline and how do they deal with compliance infractions, how do they deal with wrongful repossessions, and what are the steps that they're taking to mitigate those risks for you as the lender. So there's a number of different things, but I would say that a really big focus at the DRN side is that we try to partner with all the trade associations that positively affect our industry. And those direct repossession trade associations are vitally important, and so are the associations like APSA and the RMAI and other trade associations. So it's really, in my opinion, if I'm directing this comment towards a creditor or a lender, I'd say get involved, get as much education around getting with active agents, getting with direct agents and national agents as possible, and make sure you're checking all the compliance boxes, because at the end of the day, like you said, it is an extension of that lending institution. So you have to make sure they're representing you in the best way possible.
We've got creditors of all different sizes on the webinar. We've got over 200 people on the webinar right now. So obviously the largest creditors, they have their own networks, and again, you're referencing maybe going to an aggregator. What would they see as far as a differential in cost between going direct versus going through a listing like yourself? How does that work generally? What can they expect?
Well, I mean, you know, I'm speaking from just prior experience. Typically, you will pay a little bit more money if you go with an aggregator, and the reason being is because you're outsourcing something that you would have to do internally. You know, most lenders look at going to an aggregator for a couple of different reasons. They look at saving on cost associated to people in seats and FTEs associated to managing multiple agencies, because when you get above managing more than 40 or 50 agencies nationwide on a direct basis, then you need additional people to manage those agencies appropriately, manage their insurance and their requirements and all their training and certifications and everything associated to those states. Plus, there are different laws in different states associated to, like Louisiana. If you want to do self-help repossessions in Louisiana, your individual agents have to be licensed with the Board of Finance. In Florida, there's different regulations and around repossessors. So the question is as a lender, do you have that back office staff to perform all those duties and do it appropriately and compliant so that you don't cost yourself money or incur fines from the CFPB later on down the road? So that's one way to look at it. The other point that a lot of lenders make to us when we're communicating with them about our agencies and how they're doing in their scanning volumes and their camera activity, et cetera, is we like partnering with the select few agencies nationwide that are larger, that have, you know, a larger coverage area. They're very compliant. They have all the training and materials and everything in place. And some lenders will choose to run a hybrid model where they'll go direct with anywhere from 80 to 130 agencies nationwide, and then everywhere that those agencies do not cover on a direct basis, then they'll turn to the forwarding and aggregator model to cover the rest of the country for them. And so it's a difficult process to manage from what is your true, you know, cost savings, what is your efficiency gain. You know, you really have to be good at analytics to nail that down. And lenders, I've seen over the years and years, as they change people internally, they tend to go back and forth. They'll go from an all-in forwarding model to an all-in direct model. They'll go back to a hybrid in between. And so it's really about that personal preference of who's managing that loss mitigation group at that lending institution, of what they feel is the best fit for their organization.
That's great. So we got some good questions that are coming in, but we're a little out of time with Jeremy. Jeremiah, one more question. So I know our firm, for example, deals with collateral recovery more than just vehicles. There's any type of collateral. And so one of the questions that came in is whether you offered staging environment services for heavy duty commercial trucks and trailers, for example. Do you do anything beyond just vehicles for your company?
We do, absolutely. Typically what you'll see is the LPR cameras, the places that they typically run and operate are, I would say, less in the where big trucks park, tractor trailers included. Most of our cameras are mobilely mounted, so they're moving around on cars, and you don't see a lot of our scanning happening at truck stops and places like that. But we do have customers that manage portfolios of tractor trailers and big rigs that will get some level of lift from our data and analytics. But on the other hand, we also offer some data solutions that will help you skip that person individually out and look at other autos that they own and try to tell where they're living and where they're staying if you want to serve them or you want to go legal with a replevin or whatever the case may be. We can help you get to that person, which is the most important factor there in terms of collections.
Well, thank you. That's a great segue to wrap your session up and to hand off over to Amy. So, you know, as Jeremy alluded to, we now know how technology plays a role in this process. And now we've located the vehicle, and you know, it's time to get to the next step. And so we have Amy joining us now. Amy Holbrook is back with us to talk about what options are available to creditors when trying to recover their collateral. And I'll start with a very basic question for Amy to expand upon. You know, what's the difference between a repossession and a replevin?
So Jeremiah spent a lot of time talking to you about repossession and what we call self-help, meaning that you as the creditor can go out and hire someone and they can go get your vehicle. When I have friends at parties who aren't lawyers ask me what it means to do a replevin, I tell them it's like a court-ordered repossession. And the most common reason you would file one is, despite knowing where it is, going to get your collateral is going to result in what's called a breach of the peace, which is lawyer speak for the consumer. The buyer is probably not going to let you have it back without a fight. Every replevant has a story. No case ever lands on my desk or my colleagues' desks because it was an easy case, because someone was like, here, take the keys, I didn't pay for it. It's always bigger than that. The story is always more, breach of the peace usually involves some kind of threat of violence. Someone will come out and say, I'm not gonna give you back this car and I've got a bat in my hand. I've heard crazy stories of, I think the weirdest one I ever heard was a woman jumped in the repo truck. He had gotten out to hook the car. She jumped in his truck and pulled away with his truck. So it's always those kind of crazy scenarios. And it's not always crazy. Sometimes people just are upset. This nature of our work is difficult. And there has been a higher degree of compliance, meaning making sure we're not breaching the peace, that we're not putting people at risk when we go back to get collateral. The second most common one is, despite knowing where it is, you can't get to it. There's a fence, there's a gate, there's a locked garage. You can't get to your car, and your repo guys can't go and break in. So how do we go about getting in there to get the stuff back? Also, it pulls some of your consumers back to the table. A lot of times what we will see is we file a replevant action, and the guy who threatened the repossession agent and locked the car in the garage is now at the table wanting to figure out how best to move forward. So we are sort of, we come into play when, despite the good data, you still can't get it back.
Well, excellent. So, when does it make sense from a timing standpoint and collateral value to leverage the replevant process? So when do you dive into the replevant? When should our clients and the creditors dive into that process?
So Jeremiah said it best, time is money, and our collateral depreciates every day it's outstanding. So every day that you don't have it and can't sell it, it goes down in value. It's not like property, which we hope goes up, but we've got to get the collateral back. But you want to give time for repossession efforts. Sometimes people will surrender collateral, sometimes you can get it back and you can go about your business. So we usually get called in somewhere around 60 to 90, sometimes further out, once repossession efforts have either failed, or we've gotten a notation from an agent that I can't go back out there. This particular buyer is not going to let me on his property. The police are going to get involved and I got to step aside. And that's usually when we get involved. From a kind of collateral value standpoint, any good lawyer will tell you not every piece of collateral is worth filing a replevant on. It's a legal action. We do our best whenever possible. We combine our claim for recovery to give back possession of the particular item with a money judgment claim, meaning we sue at one time, we ask for what you're owed for the money part of your loan, and then we ask for the right to take back your collateral through law enforcement. So we're not even going to use an agent now. We're going to actually ask the sheriff usually to go out, sometimes it's a constable depending on your state, and go out and get our car because it's not safe or we can't get to it without you. So we're going to do that, and it's a serious effort. So when possible, we combine the money with the possession, with the idea being that's the best way to save you money and time. And then we work really closely with those sheriff. I would say if you're going to file a replevant, it's probably going to cost you somewhere between $1,500 and $2,000. The reason is there's court costs, which are beyond your lawyer's control. There's what I get paid, and then there's service costs. Now, Jeremiah was talking a lot about being able to locate the debtor, locate the consumer. That's really important. It drives down costs on the litigation side too, because when we know where people are, we move faster. It takes less attempts, less times the sheriff has to go out and try and serve this. So good data and mixed with good notes about what really happened in this transaction makes the process go smoother.
So I got a really good question that I think we all hope becomes moot really quickly, but it's not moot right now, is, what are creditors' rights generally for repossession during the pandemic? What are you experiencing?
Well, that has been all over the board, and it's usually driven by state. Sometimes cities have stepped in. We saw places that for a while weren't allowing self-help repossessions, but they were allowing replevants, which, you go through the court to get. Now, the courts were moving really slow too. So it was for, March of 2020 through maybe June, things were going slow, but we could still file in almost every state. And so we saw it, business sort of slow, but then it sped up really fast again. So far, all states are open for recovery of your collateral. And that's has a lot to do with the law that your right to possession is based on, which is the UCC, which is different than normal debt collection. It's about the fact that you have this invisible rope you've tied to your vehicle in the form of a lien, and that you are allowed to take that back. So we have seen it. It's been a pretty consistent, and I think things are pretty much back to normal.
So ignoring for a minute the delays that were caused by the court slowdowns during the pandemic. So this now is a non-pandemic related question. It's probably an impossible question to give an accurate answer on as far as across the country. But what time period can a creditor expect in an uncontested replevin from the time that it's filed till when they get their vehicle back? And again, I understand that this is going to be very challenging. Ohio is going to be different than California, but just generically, what can people expect?
Well, and it really does depend on where you're filing. I would say the average from the date of filing with good service is hopefully around 90 days. Now, there's a caveat because we rely on these sheriff's departments. And what tends to happen is in major cities like Chicago, sometimes places like Cleveland, the sheriff is charged with a large amount of duties. He's serving warrants, he's offering some safety patrol, he's doing sheriff sales. So some jurisdictions move slower. We do everything in our power here to keep everything moving. And I try to consult with clients when we get a case in a certain jurisdiction to get their expectations set correctly, that sometimes things aren't moving very fast. And but like go to a rural county, go to rural Ohio, because that's where I'm from, and that's sort of where we do some of our practice. Those guys are waiting to get their replevin order so that they can go out and get it. So 90 is probably average for the net for what I see.
And I assume that there's many cases where they get served with the lawsuit, the replevin lawsuit, and they pick up the phone and call you and say, where do I send the car? You don't have to even complete the replevin, right?
Right, and we call that a surrender. You know, most states allow for what's called a motion of possession, which what makes a replevin special is that I can take a vehicle back before we have a final judgment. So we send out the sheriff. These people get notification, and they play hardball with the repo agent. They might play hardball with the collector who's calling them on the phone, but they're not going to play hardball with the guy with the hat and the car with the light on top. So what happens is, yeah, they end up calling in. They either want to try and settle up so they can keep their car, or they just want to say, where can I drop it off? I just don't want the agent at my house anymore. And that probably happens 30% of the time. Like we get probably a really good turnaround with the, you know what, I take it back, you can have it. I don't want it. And we call those surrenders, and we handle those by jurisdiction, how they need to be handled. Sometimes it's a dismissal, and every client's standards are so much different. Some client might want just back payments and will tell me that he's happy with what we've done. Some clients have accelerated the balance. It's over. It's either pay up or give back the car. So it's all over the board.
So it's a good question, and you know, you have to find a way to give an answer, not totally in your own self-interest, Amy, but the question is, when do you suggest closing out a repossession order with an agent and moving to replevin? You can't say one day, because that would not be genuine. So.
No, and in fact, overlapping the two processes is probably the most aggressive stance. You can overlap them. Some of my bigger clients do this. There's an agent outstanding in the field while I'm filing the replevin. I tell the client at a certain point, like, you probably need to pull the agent back because I've got an order, we filed a bond, we need to let the sheriff do his thing. But that's an aggressive stance. So overlapping them, if you're really interested in quick recovery, seems to be the best way to go.
Okay. So a question about costs and adding it to the loan balance. And the question came in: can the replevin expense be added? And I know there's a difference between costs, which is out of pocket, and legal fees. But can you touch on what can and can't be added to the loan balance?
Generally, we don't put in attorney's fees related to the cost of the replevin. There are consumer protections in a lot of states. In other states, you could ask for the costs, but the exposure is that in turn, if you were unsuccessful in the case, the consumer could ask for their costs. So we don't tend to recommend, just in case something goes wrong, if this is a person who hasn't paid for their car and we're going to repossess it, the cost of the lawyer versus the exposure is pretty minimal when we think about recovery, right? We think about someone who's not paying for their vehicle. We tend not to do it unless it's specifically allowed by the state we're in.
Okay. So I got a question here, and actually, I chuckle because I had a case like this early in my career, which is, what if there's a third party in possession of collateral? What if somebody took their vehicle, and this was the case I had, they took the vehicle to the repair shop put a new engine in, then the person ghosted and left, and our client, the creditor, wanted to try to get the vehicle back from the repair shop. What are the rights that creditors have vis-a-vis third parties, whether the repair shops or just any other third party?
So it's sort of a two-part question. The repair shop question is unique, and it's going to be governed by state law. It's going to be governed by what's called an artisan's lien. Usually that's what we call it, not a mechanic's lien. Everyone wants to call it a mechanic's lien, but it's an artisan's lien. And the notion is that that repair shop took in your vehicle, did something to it, hopefully adding value, and is entitled to recovery too. The competing interest is the collateral. Most states hold that the lien holder, the finance company, the bank, has priority over what's called the artisan's lien. Now, there are a couple states, Michigan is one, that actually says the artisan lien trumps. So you really need to, when you get notification of a third party in possession who's demanding payment, there are a couple things you should always do. One, you should make sure that the vehicle gets inspected. There's been too many occasions in my own practice where work has been done to a vehicle, but upon inspection, the work wasn't done well, or wasn't done at all, or wasn't completed. So there's no lien if no value has been added. So the best example I have is a car that was rear-ended and the frame was bent. The repair shop who had possession, who had gone unpaid by the consumer, was demanding $5,000 for fixing the car. But on inspection, it was discovered that the frame was not corrected. The vehicle was a danger. It would never be roadworthy again. And so, you know, you just can't pay for everything. Now, there's going to be times when you go out and it's a de minimis expense. It's not worth fighting about. You're going to pay it. For the ones where you get caught, though, when they won't release your car, even though you have a right to take it back, a replevin is sort of your answer. You file the replevin action because the real question behind a replevin is who has the right to take possession of whatever this is. And you heard Scott, it could be heavy equipment, it could be a car, and it also can be things like, I think are the strangest ones I've had, a hot tub or gemstones or a heavy ladder that extends to the back of something. Like it can be anything. So the replevin question is why you go in front of a judge and ask who's got the right to take possession of this. The second part of the question is what happens when Joan and Larry have a motorcycle, but only Larry purchased it. Now Joan's driving it around and they broke up and now she's got it. The answer still is that you can file a replevin action against that third party because again, you're asking the court, isn't it appropriate that I have a possessory interest in that motorcycle that is in higher priority than Joan's? So there are two separate questions, but a replevin is when you can't recover it because self-help doesn't help you, either it's locked behind a gate or Joan's really angry and she's got her baseball bat out. Replevin is still something you can do that helps you get back possession of things that should be yours.
So I think I'm right in interpreting your answer, which is if your collateral is in the possession of a third party, not your named borrower, we have to know who has it so we can name that party in the replevin lawsuit. Is that right?
Correct. We can name that party. We can name that party for the purpose of getting back possession. We can also often sue for what's called conversion. So let's say that, back to my Larry and Joan metaphor here, let's say Joan destroys your motorcycle. Let's say she takes it apart piece by piece because she's mad at Larry. She is converted. She has civil theft, the motorcycle. You have the right to take possession of. So you can also sue for conversion in those. But yes, knowing all that data, knowing what Jeremiah can provide with location information and who's in possession helps us know who to name because you're right you're no longer suing for money on the note, but you are suing on the right to take back possession of your collateral.
Okay, so one more question before we move on to Stephanie, which is there's obviously quirky issues that come up, and I say quirky, you know, unfortunately not all documentation is perfect, and that's just the nature of high volume. You know, what if there's problems with the title? For example, let's say the lien didn't get noted on the title, and now somebody wants to go recover the collateral. What happens in that type of situation?
So that's everybody's nightmare scenario, is that you have a loan in default and then you go to pull the title and you realize somehow your lien was omitted. It wasn't put on. I've seen the ones where it was a refinance agreement and the original title with the original lien holder was released and then it was sent to the consumer and wasn't sent to the new financing entity. All states have a mechanism for how you fix this. Sometimes it's really simplistic. It's gotten more complex in the world of greater compliance. It used to be that you could just show a copy of the promissory note and ask the local titling entity, usually the clerk of courts, sometimes fiscal officer, can you go in and put our lien on? More recently, it takes a little bit more litigation. Sometimes you got to file it, what's called a declaratory action, which is to ask the court to, hey, can you fix this title for us? Our lien was omitted. Oftentimes with replevin too, we can actually combine it all into one kind of lawsuit where we file for possession, we file to have the lien corrected, and we file for the monetary judgment at the same time. That way we clean up everything at once. The important thing on title issues is that your priority as a lien holder, your ability to take back possession, sometimes is driven by first in time, first to notate the lien. So what could happen is your consumer holding the title with no lien on it could then use that to obtain additional credit, use that collateral as your lien. And as long as they're working with an outsider, it's a harder thing to do to get your position on the collateral reestablished to where it should be. But notify an attorney, it's a fixable thing. It happens, and when it happens, I think people think it's never happened before. It actually happens fairly often, and it's something we can resolve.
And I know we've seen our practice, I know you've seen it, which is the loan is current. The creditor determines that for some reason the lien didn't get noted and the customer isn't cooperating. Not because they're bad, they're ignoring it, they don't know. And so there is an opportunity to bring an action to get that lien noted, even when you have a current customer, right?
Correct, that is correct. Also, if you have a deceased, I've seen that two now, where the person had died and it was noted that the lien wasn't notated onto the title. And what had happened is the family had surrendered the vehicle over at the time after the person had died, but they couldn't get the repossession title because the lien wasn't notated. So this was, everyone was getting along. Everyone was doing what needed to be done, but we needed to correct the title so that we could facilitate the sale and get the creditor made as whole as they were going to be made. So.
Well, quick teaser on next week. So this is a teaser only, which is this answer is different when you get the bankruptcy. So we'll leave it at that and we'll tease next week. Make sure the 209 people sign back on next week. All right, Amy, well, I appreciate it. Thanks for covering that vehicle recovery and replevin. I think an issue that's next that's near and dear to all of our hearts is compliance and making sure we do everything in a compliant manner. So right now, Stephanie is the most important person on the webinar. I guess, we'll start again broadly, Stephanie. What's the purpose of repossession letters? How often they should be reviewed? What is the role that those play in this entire process?
Sure. So Amy and Jeremiah both talked about how the mechanics of how to get your collateral back. But I'm going to talk about kind of the compliance and the state laws that you have to follow in order to make sure that you can sell your collateral and then collect your balance due. So the repossession letters are governed by state laws, and the purpose is to give the consumer information about their rights under the state law. For example, they might have a right to cure, right to reinstate, right to redeem. They also have the right to know how their vehicle is going to be sold once you picked it up. Is it going to be sold by public or private sale? And in a public sale, they have the right to come in and put a bid on it. So it's all state determined law, which is comprised of the Uniform Commercial Code. Every state's adopted the UCC, but many states have sort of nuanced it. So there's some specific changes that they've made, and then there's also state-specific retail installment sales acts, consumer protection laws that states have enacted that also give certain repossession requirements for each state. And when we think about repossession letters, Scott, I'm talking about, there's really four main repossession letters. So you've got your strict compliance letter and your right to cure letter, which sort of operate similarly. They're going to be sent typically before repossession, and your consumer is going to have the right to come current. In some states, again, you're going to have to know which state you're in to know what the timeline for that right to cure is and what you have to charge your consumer to cure. And then the next letter is your notice of sale. Every state requires this. It's going to be sent after you've picked up the vehicle. But some states have certain timelines on, when you have to send this letter. So you have to be careful and know which state you're in. But this is going to give your consumer information on how the vehicle is going to be sold, how they can redeem, or if they have the right to reinstate after you've picked up, and how much they're going to have to pay. And then the last letter is going to be after sale, the deficiency or surplus balance letter. So some states have specific requirements on how you have to compile your balances. So again, you have to know which state you're in. If you're in the East Coast, our friends over there on the East Coast love fair market value. So you might have to use the fair market value of the vehicle instead of the sales price when you're determining what your deficiency balance is. So I think the important part is for repossession letters is that a one-size-all method doesn't work for each state. And if you're using the same letter for every state, you're using them wrong. And this is just an area that's blown up recently. We've seen a lot of class actions and a lot of litigation with improper procedures and improper letters. So I recommend to clients to do an annual review or at least a biannual review for any changes. Sometimes this can just be a small, we see different state law coming out, especially in California. The law just seems to be constantly changing. So really having a review and making sure that you're using your letters right and that you've got the right letters is important.
So we had a question come in actually during Amy's session, but I thought it was better served to you. And I'm going to give you the specific question, but probably broaden it a little bit as well. So this question came in specific to Illinois, but I would love to hear your answer. And you may not know the specific law of all 50 states, but generically also, if a creditor goes through the replevin process, does that change the need for certain specific letters, or does the replevin process not have any impact on that? And again, this question was for Illinois, but you may be able to answer it for generically as well.
Sure. So you still have to follow the repossession law process. So even if you're filing a replevin action, so once you get your car back in a replevin and you're going to sell your vehicle, you still have to follow specific state law. So Illinois is one of those states that has really specific state repossession requirements. So you're gonna have to make sure you send a repossession letter within 3 days of business days of picking up your vehicle, and then making sure you know whether your consumer, how much they've paid. So Illinois is one of those states that gives a consumer reinstatement rights depending on how much of the total price that they've paid. So you still have to follow repossession compliance rules and state law, even if you filed a replevin. And then after you've sold your vehicle, even in a replevin, you're still going to have to send that deficiency or surplus balance letter.
Right. So basically, regardless of whether you went through self-help repossession or court-assisted recovery, the letter process stays basically the same.
Correct. Yes.
Good. Okay. So another question is, if a creditor had accepted late or partial payments from the consumer in the past, previously and that went on for a while, and ultimately, again, they're late or missed payments, is there an impact on previously accepting late or partial payments on the repossession or replevin process?
So there is. So we've seen lately, and this comes out in case law, a handful of states have determined that it's unfair that a creditor has accepted later partial payments, and then one day it just decides, hey, I'm not going to take these anymore. We're going to repossess this vehicle, but doesn't give the consumer any notice. So we've seen case law that says that this is really unfair for a creditor to do this. So this is where the strict compliance letter comes in. What this letter does is that you tell your consumer, we're no longer going to accept those later partial payments. We're going to abide by the terms of our contract. And then here's your cure period. And typically cure periods can be set anywhere from 10 to 20 days. You're going to follow state law on that. But then you're going to give your consumer the right to come current. And if they don't, then you're going to repossess the vehicle. And you're going to put that all in your strict compliance letter so that your consumer has ample notice of what they need to do to come current, the fact that you're not going to accept any more later partial payments, and that you're going to repossess their vehicle at the end of that cure period if they don't come current. So it's not a problem if you've accepted them in the past. But I really like this letter too, just in general, and I advise clients, regardless, to send this letter, because I think it also gives the consumer the heads up that, hey, I'm late, I need to come current, and just gives them the opportunity to bring current, because we want payments. Money is better than a car that we have to eventually sell and we could have a loss on.
Great. So another question that's probably on people's minds: a car gets repossessed. It's been taken from the consumer, and there's personal property left in the vehicle. What happens with that personal property, and what do creditors need to be aware of?
Sure. So I get this question a lot. So a handful of states have actually come out with either case law or state statutes about what to do with personal property that's left in a repossessed vehicle. And we've seen, how long it has to be held for, maximum storage costs. But the CFPB last October came out with a pretty big consent order, which really changed, in my opinion, the personal property realm. So what the CFPB did was they found that it is unlawful for a repossession agent to hold personal property and refuse to return it to a consumer until the storage fee is paid. Rather, what the CFPB determined was that the storage fee should be added to the total balance due of the loan, and the consumer should have the right to get their property back without paying that fee. So you're going to put that storage fee to the balance, and you can put it in when you're doing your deficiency balance letter. But you're going to need to make sure your repossession agents are following this and giving your consumer their personal property back. So what I've been doing for clients is that we put in our notice of sale letters a little personal property section which follows the language of the CFPB, so your consumer knows who the repossession agent is, what their address is, their telephone number, and then you let your consumer know that they can come and get their property back, and they don't have to pay the fee to get it back, but that fee is going to be added to the balance of their loan.
Great. So I cringed to ask this question because I don't want to hear the answer, but I think we all need to hear answers. What happens if a creditor fails to send the proper notices? And again, I know it's a very broad question. It probably applies differently everywhere, but generically, what happens if we don't send the proper notices?
That is a cringeworthy question, Scott. So the most common, what I see is that you're unable to collect your deficiency balance. So when I see a client place a file and it's I see a bad letter, or you haven't sent your letter timely, that's when I unfortunately call you and say, we can't place this file. You're gonna have to forego this one in collections. The most damaging part is that when you have a bad letter procedure, you might draw a counterclaim or class action. And we've seen in the last couple of years some really bad class actions that are even the smallest detail in your letter that's incorrect. These consumer rights attorneys will pick it up. They'll find other consumers out there where you sent your letter to, and then file their class action. And really, the attorney's fees just rack up, and we've seen some settle in the millions of dollars. So that's I think the most cringeworthy part is that there are real damages and really expensive damages here that you could be on the hook for if you aren't making sure that your procedure and your letters are compliant and that you're sending them in a compliant manner.
Okay, so we have two questions that I'm going to combine into one for you, and then we only have 5 minutes left, so we may need to get back to being a little more thorough answer to this. But we're talking about letters and compliance laws, and I think we've been talking mostly consumer. Are the laws different when it comes to commercial, repossessions? And I guess similarly, is it the type of what you're repossessing, or is it the type of customer? Is it a business borrower versus a consumer borrower? How does the business world and the commercial type vehicle play into this?
Sure. So the commercial world is very different. The commercial world is typically only governed by the Uniform Commercial Code. They don't have as many protections or requirements. Most of the, actually, I should say all that I've seen of the Right Secure states only apply in the consumer world. You can certainly give your commercial customers this right as well to see if they come current, but they don't have the same rights.
Great. All right, well, we got 5 minutes left. I'm going to bring the other two back onto their screens. There's a couple other questions. Unfortunately, we're not going to be able to get to all the questions, and I'm pretty sure that our administrator can get those questions to the right people and get direct answers to people. But there were a couple real quick ones I thought we can get a quick answer before I wrap up. The first one's for Amy, and the question was, do you provide title services? We talked about title issues in all 50 states.
Do we provide title? Is that what you said, Scott?
Yeah, we're dealing with, we talked about their problem with getting the titles notated.
Yeah.
You do those services in all 50 states?
Yes. What we do is, because really laws even within the state of Ohio, like where I practice, can be different by jurisdiction. So what we do is, if you send us over one, the first thing we do is get it to an attorney in the state so that they can analyze it by jurisdiction and by state law. And yeah, we can take them on and take a look at them and figure out the course of action.
Great. And then Jeremiah, a question came in for you, and I wanted to have you address it real quick in the minute we have left. Is, can you make sure that as an aggregator, the vehicle is automatically sent to an auto auction? What is that process?
Yes, well, so that depends on the aggregator. Some aggregators provide remarketing and transportation services, and it's included in their proposals and their fee structures. And some do not. It just depends. I mean, some provide not only transportation services to auction, but they also provide the representation and remarketing services that will retitle, remarket, and do everything for you down to sending you the proceeds back. It just depends on the aggregator, really. Great.
Well, again, I wanted to thank our panelists. I'm pretty sure we could have had this thing go on for 2 hours. You do have our contact information. I'll make sure that any questions that got submitted get directed to the right person. But if you think any questions afterwards, please reach out to any of us. We're here to serve you. We're here to answer your questions. That's the reason we do these webinars. And again, I hope you found today very informative. You're going to get a recording of this shortly. So again, you'll have this stuff. And again, you see our last slide that has our contact information. I wanted to remind you, I've done a couple plugs. We're going to have part 2 of the webinar on May 12th from 2 o'clock to 3 o'clock. You see that on your screen. And in that portion, you see what we're going to be covering, right? Deficiency balance collections, risk scoring, and so forth, what to expect in the litigation process. And again, I tease a little bit on the bankruptcy issue, but that's obviously very relevant to all of us, although bankruptcy are down, but as they'll start to pick up, and with the large number of what's expected to be a wave of auto deficiency, that I would expect that as those issues pick up, so bankruptcy. So again, that's 2 to 3 o'clock Eastern time, a week from today on May 12th. I want to again thank everybody, thank our panelists, thank all of our attendees. We're up over 200, which is great. And that'll be the end of our webinar today. Thank you.
Thank you.
Thanks, everyone.
Thank you.